Hi, this is Dustin with Dustin's Dollars. Today, I'm going to be talking about Bitcoin mining, how you start to look at, Bitcoin mining stocks and really evaluate them. This really came on because I saw a couple people talk about investing in Bitcoin mining stocks and seeing some high-profile folks who have done that and people following them to some degree. And I also saw some discussions where people didn't seem like they understood it. So I wanted to give a brief introduction into Bitcoin mining. So before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I do not hold any positions in any Bitcoin miners. I do hold Bitcoin itself. This video should be for your entertainment purposes only because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. All right, so with that out of the way, here's what I'm going to talk about today. I'm going to just give you a brief overview so you can actually understand Bitcoin mining because it's a little bit different than, say, like gold mining, as people sort of will compare it to. I'll talk about the actual business model, some of the hardware and the costs that go into it. I'll give a little bit of some statistics about some of the large miners, not a whole lot there, just a bit. And then, a bit of a model for their, profits and loss and how you can think about these companies going forward because it's not really straightforward. Okay, so the real simple model that I think everybody knows is, Bitcoin miners, they run computers. Those computers sort of solve problems, and when they solve those problems, they earn Bitcoin. And then they can sell the Bitcoin for dollars, right? And so you see that, the Bitcoin price, everybody can follow that and know when it goes up and down like crazy. And so, of course, that's the general business model. They have to pay all their pay for the equipment and all electricity and such, but then whatever they keep that's the profit, and that's the business model, of course. But there's some complexity in this that you really should understand if you're going to invest in a Bitcoin miner. So let's talk about Bitcoin itself and how, what does Bitcoin mining mean? So a little bit about the Bitcoin network and the design of Bitcoin. You've heard the term blockchain. Roughly every 10 minutes, there's a block that gets created. Or mined or minted, whatever you want to call it. There's one new block that can get added to the blockchain. And this doesn't happen exactly every 10 minutes, but on average, it is about every 10 minutes. So every block has a reward. By the way, I saw Wakaza. I saw your comment was way early. Hi, thanks for hopping on the stream. I don't know if you're still here or not, because I think that was added a while ago, and I'm still getting everything prepared. So really appreciate you hopping on the stream. Anyways, getting back to the video. So there's one new block roughly every 10 minutes, and each block carries with it a certain amount of Bitcoin as a reward to the miner. Because in order to create that block, the miner had to effectively solve a problem. And I'm not going to go into too much detail, but it's a problem, and the interesting part about that is the difficulty of solving that problem can change, right? And so it can be sort of fine-tuned so that these blocks do get created every 10 minutes. So if there's a lot more people who are hashing, I'm getting ahead of myself, but I'm getting ahead of myself. I'll talk about that in just a second. There's a reward with each block. As of right now, each block gives a reward of 6.25 Bitcoins. And now that reward gets cut in half every 4 years. That's if you've heard about the Bitcoin, the halving cycle. That's what that means. And we're about to trip over the end of a 4-year period in roughly April or May of this year. And that will be the end of 4 years of having the block reward at 6.25 Bitcoins, and it will get cut in half to 3.125 Bitcoins. So again, that's happening in just a couple months. And so, as I said, creating that block does require solving this problem. That requires running this thing called a hash function, which I won't go into the details of that. This is a computer science thing. But basically, it means that they have to guess at the answer to run it through this hash and see if the answer, when they put in that number, is right. And so they just try lots and lots and lots and lots of numbers, trillions of numbers, even more. And by doing that hashing, that is the operation that the miners are actually doing. And if they find the right number that goes into that hash, lets them get that makes it so that number is the right answer, then that allows them to actually create the next block on the blockchain. Everybody else who tried a bunch of numbers and none of them were the right one, or were, let me say, an acceptable one, because there could be multiple numbers. There's probably not only one number. There's many numbers, but it's sort of like they are actually trying to find a needle in a haystack, where there might be multiple needles, but the first person who finds the needle gets to make the block, and then they move on to the next haystack, if that makes any sense at all. Hopefully it does. And so as they're creating these blocks, that's how the miners are actually getting those rewards. When your miner, or if I'm a miner and my machine actually finds the number that creates the next block, then the reward goes to me. Then now everybody starts to try to create the next block on the blockchain, and they keep trying for that one. And then once they find the number for that one, they get to make that block, and then they get that reward. So as you can imagine, having more computers at your disposal to try out more numbers, meaning to run more hashes, more hashing per second, that gives you a higher chance of, for each block, that you're going to actually be the one to find the number that lets you actually create that block and then get that reward. I will also mention here, I'm not going to go into too many details, but there are also fees that get paid. Whenever you want to do a transaction on the Bitcoin network, or anyone wants to, they pay fees to the miners in order for the miners to actually include their transaction in the block. And so there might be more people that want to move Bitcoin around and make transactions on the Bitcoin blockchain than can fit in the next block, and that's, I think, usually the case. And so in order to do that, people pay fees to the miners, and so people will pay more and more fees if they want to have their transaction included sooner rather than later. And so there's sort of a supply and demand for you call it block space on the blockchain in Bitcoin, and people might pay more, they pay higher fees to the miners if they want to get their transaction included as soon as possible. And then some people might actually pay lower fees and send it to the miners, and the miners might hold on to that and not include it in a block until they have no other transactions that are worth more fees. Because of this sort of supply and demand, there's not a fixed fee that people pay. It's just, it's a market like, anything else. And it's a market for getting your transaction included on, into a block. And so the fees that people actually get from, or that miners actually receive from each transaction on the Bitcoin blockchain, they're unpredictable. And so I actually can open this up. I have the chart open that shows you the transaction fees. And so this is, hopefully, this is not too small. Let me kind of hide that. Yeah, so this is every day, I believe it's on a daily basis, how many total transaction fees were paid to miners in that day. And so each day would represent quite a few blocks. I want to say it's on the order of 200. I think there's 6 blocks per hour, right? One every 10 minutes, 6 per hour. And so multiply by 24, that's somewhere around 200 if I can do math. It's not exact. But so this represents how many there were for all miners in that day, not for each block. But you can see it's very, very unpredictable. Back in January of 2023, this was averaging around 15 to 20 Bitcoins per day. And then there was this humongous spike, in the middle of the year where at least at some point people were paying, 400, 600, 400, way more, way more in fees. And so this is a really unpredictable stream of revenue for the miners. But, over time, and then it came back down. This is unpredictable. I think as of right now, again, we're looking at it and it's like 100 Bitcoin per day. So let me just do the actual math. If that's 100 Bitcoin per day, 6 blocks times 24 hours in a day, 144 blocks. So that's roughly 1 Bitcoin. I'm totally rounding it off. Maybe 2/3 of a Bitcoin per block that the miners are going to get. And this is going to come in as it's going to come in handy later on when I talk about how much Bitcoin do miners actually make when they're doing this mining. But that gives you an idea and hopefully helps you understand what's going on here. All right, so let me move on and talk about hashing real quick. This is, if you ever hear proof of work, this is the work, right? Because people have to actually have computers that run through these calculations and try out all these different numbers. Each time they try out one number is running through the hash function one time. I'm not going to go into more details there. You could go way deep on this, but the point is that they have to actually run these calculations. And one of the very, very interesting things about Bitcoin, right, is there is a fixed amount of Bitcoin. And so the issuance of how many new Bitcoins actually come into each block is known. As I said, it's 6.25 per block now. It will get cut in half in a couple months. And then that will be the case. It'll be 3.125. And that will last for about 4 years. And then after another 4 years, so in 2028, around about there, it will be cut in half again. Now, the interesting thing is, if you think about this and I say, hey, every time somebody, runs one of these hash functions with a number, they might find the right one and actually be able to make that next block. what happens if at the end of this year there's actually twice as many Bitcoin miners out there, and they're actually running twice as many hash functions, per day or per 10 minutes. And so, wouldn't they be finding blocks twice as fast if now there's twice as much sort of hash power on the network? And the answer is yes. So Bitcoin has a mechanism built into it that will actually adjust the difficulty up or down. I should be in presentation mode. They'll actually adjust the difficulty of that, of how hard it is to solve that problem every 2 weeks. It'll adjust the difficulty. And so as more and more people come onto the network, it becomes harder to actually solve these hash functions, because they say, hey, you have to get a number that's even, let me put it this way. If there's a haystack and the Bitcoin miners are, picking out a bunch of different, things there and trying to see, is this a needle or is this a piece of hay? They can adjust the difficulty, let's say, about every 4 years. And this is really important. It's really important to understand this, and I'm going to go through some of the implications of this in just a moment. When we talk about the power of hashing, we talk about the network of Bitcoin itself. We talk about how many hash operations can be done per second, and usually we talk about this in units of trillion hashes per second, because computers run way more than just one per second. So usually for an individual Bitcoin mining machine, you would talk about in terms of how many terahashes per second that is. And so that's a trillion hashes per second. And then when you're talking about the network itself, I misspoke. The current network is about 520 million terahashes per second, which is 520 exahashes per second. Those are metric prefixes if you're not familiar with them. So it's 520 million terahashes per second is the roughly total Bitcoin network. And again, this actually changes hour by hour, because some people might be coming online and offline and powering their machines on and powering the machines off. And I should have this open here if it will load for me. Yeah, here we go. And so this shows you a 1 year chart of, as best the estimate as we can get, what was the total hash rate of all Bitcoin miners globally. And you can see this has continued going up, but it is unpredictable to a degree. But this is much smoother, where you can see the trend is clearly up and up and up. And if we go to like a 3 year chart, you can see this is it has actually come down. At points in 2021, hash rate actually came down. There's some reasons for that I won't go into today, but you can see the overall trend has gone up. And if we go to the all-time chart, it has gone up a lot. And clearly this, coincides a fair bit with Bitcoin's price, right? When Bitcoin's price rises, Wakaza, 12 minutes in, what did I miss? I'm talking about Bitcoin miners. So I went over so far a little bit about the details of how Bitcoin mining works on the Bitcoin layer, and how the rewards get issued. If you have any questions, feel free to put them in the chat. I'll try to answer them. But this is the overall trend for Bitcoin, the power of how many hashes can be done on the Bitcoin mining network. And so, as of today, again, we look at this, and it's somewhere in it might be too small for you to see. It's 500. Oh, you can even see. Maybe you can. I'm not sure, because it's a pop-up on my screen. 520 roughly terahashes 520 million terahashes per second. That's again the total global overall Bitcoin miners, everybody all together. That is actually right now what the difficulty of doing this, of actually creating a block on the blockchain is attuned to. And so you can know that, or you can see way back here when it was 2014 and 2010, they don't have the data for that, but back in 2011, 2012, it was significantly easier. You could run this on your home computer because the whole network was, what is this? Way, way, way less. Now we're at 520 million. Back then it was, I think that's saying like 17, 15. So it's a tiny fraction of what it is today, because clearly there weren't that many people who knew about Bitcoin were running, miners. But the overall trend continues going up, and I'll talk about this because it's really important to understand how this impacts Bitcoin miners and these companies. So let's talk for a bit about mining equipment. As I said, the hash rate is measured in terahashes per second, and then they measure power consumption in watts. And so we'll go through an example to understand, like nuts and bolts, what are you doing, or what do the calculations look like? So I pulled up, right here. Yeah, so this tab. Close to me so I know what I'm doing. This is a Bitmain Antminer S21. This is sort of bleeding edge. This is coming out of, a batch made in March 2024. So they're not even, out yet. I'm not sure if any of them have been shipped yet from this company, or if this is like, hey, this is our next batch of them. But regardless, this is basically one of the best models you can get today. And for this one, it is 200 terahashes per second, and it consumes power of 3,500 watts. And so they have an efficiency metric here, which is 17.5 joules per terahash. I'm pretty sure that's the units here. And then they also have the price, right? So you're looking, the price for this is about, if you were to pay retail price, $3,900 for one of these machines. And so, but let's say you spend $3,900 for this, and now you can do 200 terahashes per second. So you can do 200. The whole network is 520 million. And so it's scientific notation, right? But you have a tiny fraction of the overall network. Now I'm going to run through an example. Let's say you actually bought 10,000 of them, right? So multiply this by 10,000. This is if you purchased 10,000 of these things with the current network, you would have what's about 0.4% of 0.38, but by these numbers, but about 0.4% of all of the Bitcoin mining power that exists today. So if you got 10,000 of these connected up to the network, you'd have 2 exahashes per second worth of hash power. And so you could expect from this to actually, with the current rewards at 6.25 per block, you could expect every day on average to make 3.46 Bitcoins. And again, this only comes in units of 1 block. So really roughly, if I'm looking, that would tell me that you have, you're going to make about 1 block every 2 days of running these. You would consume 840 kilowatt hours per day with all of these machines. Is that right? Or did I not multiply by 10,000? That seems maybe low. Maybe that's 840 times 10,000. Because I think I was doing that on an individual basis when I first started this. And so I think maybe that's actually the amount of power you'd consume per day. That's not right. I'm sorry, this is embarrassing to do it. Let me do the calculation. So each one has 3,500 watts. You would power that for 24 hours divided by 1,000. And so every day, each one of these would consume 84 kilowatt hours. So you would have to multiply by 10,000. I just think I didn't finish my statement there. And so that would be your total power consumption per day, I think. And so if you had this, if you were at a Bitcoin miner, you have some really good deals on your power, you'd spend, 5 cents per kilowatt hour. You'd spend $42,000 per day just in power. And that would, again, get you about 3.46 Bitcoins per day, which at current prices, let me totally round this off. If it's at $50,000 per Bitcoin, multiply by, 3.46, that's $160,000, $170,000 per day. So that's pretty good margins. Now, here is, looking at the cost if you're going to run Bitcoin miners. Of course, you have to buy the equipment. Then you have to pay for the electricity, which, as we just saw, is actually a good portion of it today, right? So what I just said, you're paying about, what's that, 1/3 of the Bitcoin you receive. You're immediately having to pay just in the electricity to run your miners. And again, you have to pay a good chunk for your Bitcoin mining equipment themselves. Their ASICs, that's a term for the actual the types of chips that you're buying that do the Bitcoin mining. But you look at this, and so if you were to buy those 10,000 miners in order to get 3.46 Bitcoins per day, you would spend $39 million up front to actually buy those. So you do $39 million down, and then every day you'd be paying again, what did I say? That's 84,000. I'm not going to fix it right now, but you're paying about $42,000 per day just in electricity. And so that's kind of what that, it's a significant portion of your cost. You would also have to pay for your facility, right? You have to have somewhere where you're going to put these. You have to have security, etc. You have to have cooling for all this, right? Because these generate a lot of heat as a byproduct of operating, and you have to cool them somehow, because if they get too hot, then they'll fail more, and they will not be as efficient just in their operations. Then you also need people to actually maintain this stuff. Things break, things will need you'll want to deploy new equipment in a new data center. And, oh, I dropped. Did I drop? This says I'm still live, but my connection on my phone dropped. Well, Cause, are you still there? Oh, for real? Is it still going on? Oh, it is still going on. Maybe. That's so embarrassing. I'm sorry. I was checking it with my phone. It said it dropped there. I'm not sure what's going on. I apologize. I'm going to keep going here. So you'd also have to pay for your network somehow, right, to get the internet connected. And there's a lot of risks in this, right? So, and it's okay. So you're still there. There's a bit of a delay. Cool. I'm going to keep going. Thank you. Really appreciate it. So the cost that you have to actually do this mining, as I said, all of those things combined, and there's some significant risks here, right? Because I'm gonna go through those here, and then I have a couple models to talk about. You don't know what the Bitcoin price is going to be. And this is one that I think everybody knows when they're investing in Bitcoin miners. So I'm not going to spend a lot of time on it. But I will say, if you invest in a Bitcoin miner, this risk can be magnified quite a bit if they are trying to actually sort of trade Bitcoin. Meaning if they're not just mining the Bitcoin and then selling it all right when they mine it, you have the risk that the Bitcoin price is going to move up or down. Or really the risk is that it moves down between the time when they actually mine that Bitcoin and the time when they decide to sell it, on the market. Because as I'm sure everybody knows, the price of Bitcoin itself is very volatile, goes up, goes down. And I know a lot of people are investing in Bitcoin miners because they want to have exposure to the upside on Bitcoin price itself. But that is there's a significant risk there that the price could go down. And in particular, there's even a risk that Bitcoin could, be very volatile and go up and go down. But if the company itself is not just selling it roughly as soon as they get it, you run the risk that the company itself is not a very good trader of Bitcoin, because if they're deciding when they want to sell it, they may not do a good job with that. And in particular, this is a risk if they hold Bitcoin on their balance sheet, right? So if they're not just trying to time it short term and say, we're going to try to get the best price we can over the next week or two after we mine it, like maybe that's that's sort of a short term risk. But some of these Bitcoin miners are actually holding it on their balance sheet, right? They intend to have this for months and years, and at that point, you are really, really exposed to the Bitcoin price risk. Again, I think a lot of people want that, but that's something certainly to be aware of, because these people have to fund their operation somehow, and sooner or later, the dollars are going to be spent on power and equipment, etc. And at some point, they're gonna, they may be forced to sell Bitcoin at a price that they're not happy to sell at, just because they have to actually continue operations. Now, Bitcoin fees. I talked about Bitcoin fees. The miners do receive this as income, but this is something that varies wildly, as I showed with that chart before. There's a humongous spike in the middle of 2023, and then it went back down, and in Q4 of 2023 seems to be elevated a bit compared to most of 2023. But who knows what the fee structure or how high the fees are going to be in the future. It could go way, way up if adoption of Bitcoin really takes off. It could go down if adoption of the network is not as high, and if in general there's more usage, let's say on layer 2s for Bitcoin, or more transactions happen on Coinbase itself or in the Bitcoin ETFs rather than people moving around physical Bitcoin itself. And so that is a risk that you can't really count on. You can count on what the rewards are going to be that are issued from actually doing the mining, but you can't count on how many fees you're going to get. Even though, that has been non-trivial in the past, right? I think in some of the companies I was seeing in Q4, they said that they were getting about 20% of their overall Bitcoin as fees. That could drop quite a bit. Kaza says, crypto mining is slowly growing in popularity in Hawaii. Graphics cards get sold mostly. I can't see the very end there because it's icon of mostly, what is it, one at a time at Best Buy. Sorry, my thing has an icon over your actual text here. Oh, I can read on my phone. Get sold most time at Best Buy. Yeah. So, and the graphics cards are actually useful for it, but the equipment that I showed, people will get sold out. Yeah. Sorry, that makes sense. It makes sense what you're saying here. The equipment that I showed here, these are specialized, like GPUs, graphical processing units. those cards from NVIDIA and stuff. Those are good at doing Bitcoin mining, but they are not as good as these. These basically, because GPUs are still more general purpose than what these are. These particular chips that are in the Bitmain products, and there's a couple other companies that do this. They are specialized that like they print the chips themselves to just do hashing for Bitcoin, and so these things are going to be significantly more efficient even than GPUs, whereas GPUs are significantly more efficient than just the general CPUs you would have in your computer. But yeah, it is growing in popularity, and I think this is another risk that actually ties into what I was about to talk about, which is the Bitcoin network hash rate. And so what we don't know, I had that chart up earlier where the overall hash rate of the network has gone up, and I'm going to open this up again so that you can see this. But this is one of the biggest risks that I see that personally makes me kind of stay away from Bitcoin miners, from the Bitcoin mining stocks, because you don't actually know how much Bitcoin your company can mine. So let me repeat that, right? You don't know how much Bitcoin they can mine. I can give you an estimate and say, look, right now it seems like the total network is 520 million terahashes per second or 520 exahashes per second. And if your company, let's make the math real easy, has 5.2 exahashes per second, you have 1% of the total hash rate of the overall of global the Bitcoin network. And so on average, you're going to actually create 1% of the blocks. And so that's actually pretty, cut and dry, that, that makes sense. And there's some randomness to it because, you're kind of finding needles in haystacks, and sometimes you get more lucky and sometimes you get less lucky. But, over a reasonable period of time, that's going to average out. And you can say, we have 1% of the hash rate, we will create 1% of the blocks and therefore get 1% of the rewards. The problem here is the Bitcoin network itself, as we see, the total number of people that have their machines mining Bitcoin changes over time. And, if more and more people decide that they want to actually get into Bitcoin mining, the hash rate of the overall network will go up, which means your portion of the network, if you have that 5.2 exahashes, and let's say the overall network doubles to from 520 exahashes to 1040 exahash, 1040 exahashes per second. Now all of a sudden, instead of having 1% of the hash rate that exists, you have 0.5%. And now instead of making one of every 100 blocks, make one of every 200 blocks. And so you have exactly all the same equipment. You have the same amount of expenses, right? You have to pay the same amount of power to do the full 5.2 exahashes that your equipment can do, but you are only getting half the amount of Bitcoin, right? When more people add more machines in the network and can do more hashing, that means everyone gets a smaller share of the Bitcoin. Because Bitcoin's issuance is fixed, more people doing hashing does not mean that more Bitcoin gets issued, in proportion. Bitcoin issuance is fixed, and now it's all up to the network to decide, for people to decide how many computers do they want to actually have mining Bitcoin. And that is what determines whether it's easier or harder, for you to actually get the Bitcoin. So that is a humongous risk. Hopefully that example made sense to you. If not, feel free to, ask me in the comments. But that's a big deal. And this is a really big deal. Maybe this is the time for me to go into it. When I looked at some of the largest Bitcoin miners, I got some of this information from their investor presentations. These are the largest publicly traded miners, right? So these are not, people just buying graphics cards at Best Buy. They are, these are companies that are buying these machines from, very, very specialized machines, buying them in bulk, putting them in large facilities. I could open up, you can see like here's, I'm not sure if that's an actual facility. It looks like an actual facility. You see the cars there. This is the scale that they're doing this at. They have tons and tons. I don't know that they have an internal. You can see all the power that's going into those. This is, by the way, this is RIOT Platforms. This is one of the largest Bitcoin miners in the world in terms of public companies. I think they might be the second largest. It's possible, but they you look at this, and they are actually doing this with specialized chips, and they all want to expand. So I put this in a spreadsheet from what I could get from their investor presentations. Column C is what their current report at end of 2023, as best as I can get it, how much hash rate they had. This is measured in exahashes per second for that company. And so you can see even the largest one that I could find, Marathon, I think it's Marathon Digital Holdings is the company, ticker is MARA. They have 22.4 exahashes, which if you divide that out, sorry, I guess I divided out here. They have about 4.3% of the total hash rate of everyone globally. And then it goes down from there. You can see these other companies. Sorry, I see a comment. Well, Kaza says they build theirs instead of buying the unit. You are showing interest in technology is growing. That we are involved working with NASA and add classes in public schools is very good. But the state needs to do a $60 million update to their IT infrastructure. Interesting. So where was that? So with these big companies, right, they're all planning to expand. So I have column C as their current hash rate. Then they all talk about how much they're adding this year. How many of these S21s or other models of these Bitcoin miners, these ASICs that they've ordered, and I got a rough number for what they intend to have at the end of this year. And I couldn't find this for all of them. Again, I'm sure it's somewhere, but I wasn't able to find it, in a reasonable amount of time. But you look at even Marathon is looking to go from 22.4 to 30. RIOT Platforms is looking to go to 10.9 to 36 by the end of 2024. CleanSpark is looking to double from 10 to 20. And so we're talking significant increases. I looked at this at the percent increase. This one's 34%. There's a 230% increase, 100% increase. And so the point is this trend of more and more hash rate, more and more, computers running to actually mine Bitcoin going up seems to be, it seems like it's going to continue, right? It seems like, sorry, this is the right spreadsheet. Almost all of these companies are talking about expanding. And so, again, getting back to this risk, this major risk as I see it for Bitcoin miners is we don't know how much hash rate there's going to be overall. And so these miners might be doubling, maybe they double their capacity. CleanSpark, I'm just picking one out of the list here. Maybe they double from 10 exahashes per second to 20 exahashes per second by the end of this year. They spent quite a bit of money to do that. Now they're paying twice as much in terms of their power costs, twice as much for their facilities, etc. And if the overall network this year doubles from 520, exahashes per second to 1040 exahashes per second, they would be making the same amount of Bitcoin. They're spending more, but they're getting the same amount. So they had to double just to keep up with everyone else. And this is going to get worse this year. When I say they're making the same amount, it's actually going to be less than what they made in 2023 because of the halving event that I mentioned, right? In April or May of this year, the rewards for each block, the amount is going to get cut in half. And so they might double all of their expenses, spend a lot of CapEx this year to double their capacity. And at the end of this year, actually be making less Bitcoin. That is just how things are designed. I could go into even more detail on why this, sort of makes sense from the design of Bitcoin overall. But the net impact is you're going to see people, the expenses that you have in order to actually produce the Bitcoin, right? How much you're paying for power, how cheaply you're able to get those these miners, and how efficient the model of miner is that you have versus someone else. If someone else has the older generation, it's the people who have the less efficient machines and the people who pay more for power. Sooner or later, it's going to be unprofitable for them to continue mining. I want to underscore this even more before I go on to that. But when I talk about the growth, all these companies have growth projections, or some of them have growth projections for the end of 2025 that are even more, right? Marathon was looking to more than double from 2022, to about 50 by the end of 2025. CleanSpark thinks they're going to be able to go from 10 at the end of 2023 to 50 also at the end of 2025, to match Marathon and maybe be tied for the largest Bitcoin miner. It's a 400% growth between 2023 to 2025. And all of these companies do have some Bitcoin mining operations. They're all planning to expand them. And Kaza asks, are these units loud and would it cause a room to be warm? I do not know. I'm sure they're fairly loud. I don't know for sure. Sorry, I just contradicted myself. So I would guess that they're fairly loud. I have not been around a Bitcoin mining machine itself, but I have been in data centers, and they're very loud, right? When I went to visit a data center, they wanted us to wear earplugs. And it'd be, no, you're fine. Those are not silly questions. They're reasonable questions, especially because, like, I've considered getting one of these at home. I would be putting in probably a closet or a room somewhere that isn't going to bother people. It's a valid question, right? Could you get one of these and have it at home, right? If it's loud, that does make a difference. I think if you're considering doing it at home, the one thing I would say is I'm not sure you can do it profitably, I'm not sure you can do it profitably for very long, given the growth of the overall network at the electricity rates that we as consumers get. And so let me talk about this for a moment. These companies do report, a couple of them report their cost of power in, how much dollars per kilowatt hour. And there's actually a pretty big discrepancy. RIOT Platforms, for whatever reason, says that they get it for 1.7 cents per kilowatt hour. And they went into some detail on their presentation about how I think they're getting some credits for something. Where's the chart? They have some chart where they say, like, hey, there's some times where we shut our machines off and then we turn it back on and we're getting credits and demand in return for doing that. But they've reported, as they say, their overall cost of power is 1.7 cents per kilowatt hour. That is really low. And that's what you're competing against, right? If you want to run a miner at home, that's, they're able to continue running them with an average cost of 1.7 cents per kilowatt hour. I know my cost of electricity, when I add in everything, both the supply and then the distribution, I want to say mine that I get at my house is somewhere closer to, 15 or 20 cents per kilowatt hour. It's, a lot more than this. And even some of the other miners, right? There's a discrepancy where Marathon said that they're getting about 4 cents per kilowatt hour, which is already double what RIOT says. CleanSpark said they're getting about 4.8 cents per kilowatt hour. CIFR mining, I think is what they're called, said they're getting 2.7 cents per kilowatt hour. And so there's quite a bit of discrepancy here. And again, all these are, as far as I can tell, significantly lower than what you or I, as sort of just individuals that have just a residence are getting in terms of our electricity rates. So you're competing against them. And one of the other things I will say is they are getting better deals on these machines, right? So they're able to expand and get a lot more hash power for a cheaper rate. Let me find one of these announcements here. So CleanSpark, this is just one that I was looking at. Right, so CleanSpark had this announcement. They said, we've ordered 60,000 of these Bitmain S21 units, and they said that they were able to get them for, let me find the actual number. So they ordered the first 60,000 units for $193.2 million. Do the math on that. 193.2 divided by 60,000. Sorry, I need to multiply by 1,000 to make the units work. They paid $3,200 per machine. The retail price, if you're going to go buy here, as I said before, is $3,900, right? So they're already getting, what's that, a 25% discount? 18%, right? But they're getting the machines cheaper than you. They have the electricity cheaper than you. They have economies of scale, for their facilities. Granted, I guess if you're just putting one in your closet, you already pay for your house, you already have all this stuff, so you don't have to buy a facility to do it unless it's against the terms of your electricity, your electricity supplier, which I don't know. It could be the case, but just to say, these people have advantages that you and I don't have. And so I think that's something to keep in mind. But on the flip side, some of us might want to do this. I know that there are people out there that will actually, they will want to run a Bitcoin miner themselves for their own reasons, even if they know that it's not profitable, even if they know that they could go out and buy Bitcoin cheaper, on Coinbase or whatever. They are willing to do this. There's a couple advantages if you were interested in this. One of the biggest advantage, and I don't personally do this, but you could do it for this reason, is if you wanted to get Bitcoin in a way that is not associated with you, right? When you mine Bitcoin, no one knows anything about who mined it. All they know is it is in this Bitcoin address over here, or more to the point that they can see the transaction, right? They know but if they don't have your private key, they can't get it. And all they know is that it's in this transaction over here. It went to your address. And if you buy on Coinbase or any other exchange, pretty much, that Bitcoin that you purchase is going to be tied to your identity. And so some people would like to mine some Bitcoin and not have it tied to their identity. And so that is one reason why some people might do this, even if it's not profitable for them. There might be other companies, or even, and this is where it kind of gets in a little bit into to politics to some degree. There may be other companies, one reason or another, we'll turn off our machines, and then now I get disconnected. We are back. Wakaza says we are back. Am I getting disconnected here? Wakaza, can you hear me? It seems like I'm maybe... Oh, what's going on? This is frustrating. Let me see if it ever updates. I think maybe it's really spotty. I'm not sure. Maybe it's better now. Seems like maybe it's better. Hopefully it's good. Let me see when the screen actually updates. I think I'm good here. I'm sorry for everybody who's watching this, and it's cutting out. My internet is thought it would be better with the fiber. I'm not sure if this is the actual route or not. It seems like it's okay. It's seems to be back now. Hopefully, let me know if there's any more issues in the comments. I'm trying to watch it also on my phone down here. That's why I'm keep looking down. It looks kind of wonky. Anyways, but I did want to talk about a simple model. If I were going to look at a Bitcoin miner and look at their profits and loss over time, right? Because I've seen people talk about and compare Bitcoin miners with their, price to earnings multiples and some other stuff. And I just think that's not a very good way, because if you look at this, you're looking out 4 years, 8 years, 12 years, right? Your price to earnings usually is a reasonable tool when you have a mature company or a company that's fairly predictable and growing at a normal rate, and the revenues are fairly predictable. It makes sense to kind of use some shortcuts sometimes, use price to earnings rather than do a full discounted cash flow model or full analysis. Bitcoin miners are an interesting beast because 2020 to 2024 they made 6.25 Bitcoins per block. That's going to get cut in half this year. 4 years later, it's going to get cut in half. 4 years later, it's going to get cut in half again, right? So in 2032, after that halving, they will only be making 0.78125 Bitcoins per block. Sorry, that is the reward for everyone on the network. And the amount of people who might be competing for that amount of Bitcoin, if you're looking at it and you're saying the total hash rate of the network continues going up, even if it's not going up quite as steeply as it has been, even if it just continues going up, that means there's going to be even more people competing for a tiny fraction of the Bitcoin that is being issued today. And so this is where I think just looking at something simple like a price to earnings multiple for Bitcoin miners it's just not a good idea. So if I look at these things and I'm looking out a couple years, I really want to see how much is being issued, what is the revenue for that, and then what are their costs going to be. And so I have this is one model. Let me see if I can, hopefully this is understandable, and I'm going to try to talk it through. So we're going through every year, 2023 all the way to 2032. And it's actually 2024 is where it starts. Just putting 2023 as a starting point here. I have a hypothetical I'm looking at, and again, these are not necessarily meant to be for this particular company for Marathon, but I just started and I said, hey, what if I started with a large company? We have 22.4 exahashes of capacity per second capacity now. Let's say we think by the end of 2024 we're getting to 30, and then 50, and I just went up. Let's say every year we try to make our target 20 exahashes more per year, and so that goes all the way out. And you say by 2032 we're going to be doing hashing 190 exahashes per second. That versus the estimate for 2024, that's like a 6x in terms of hashing capacity. So if you were thinking of, let's say, people compare these to gold miners. If you were thinking at a gold miner and you say, well, in 8 years we're going to have 6 times as many gold mines in operation, you might be thinking, well, they're pretty obviously going to be mining 6 times as much gold, and that they're going to make a lot more money 8 years from now. However, with Bitcoin, that's not necessarily the case, and so you have to actually do the math. And one other thing you have to worry about is your older machines. Like these machines don't last forever, and sooner or later those things are going to die out. And so for this model, assume there's a 6-year lifetime, and so all these machines you have in 2023, in 2028, you have to repurchase new machines to replace those, those that died. Same for each year here. And in at some point, you have to then continue repurchasing 20 more exahashes per second per year of machines just to replace the ones that are dying, that are maybe they'll last longer. This is just how I'm looking at it. And so I looked at their cost of power. Let's assume they have this, 4 cents per kilowatt hour. And then I model out the block reward, right? And so for 2024, I'm doing this after the halving because it's going to happen in roughly April. And so you have this 3.125 for 4 years. Then that gets cut in half to about 1.5 Bitcoin. And that gets cut in half to about 3/4 of Bitcoin in 2032. I also look at what do we think the fees are going to be per block. And I just use an average of 1 Bitcoin. I don't know that there's really a reason. Again, this is a huge unknown. I had going back to my list of risks, the actual fees, who knows what that's going to be. And I'm just touching on it here. The lifetime of the equipment, that's an unknown as well. These are brand new machines, the S21s. I talked about them actually using, and that they've talked about ordering, for some companies have. We don't really know. Are these going to last for 3 years, for 5 years, for 10 years? It's really hard to say. At some point they are going to start failing. When you're running tens of thousands of these things, that failure rate really starts to matter. But again, getting back to the fees, I just sort of use what it is today because it's really hard to say what these are going to be in the future. It really depends on what's the adoption of the Bitcoin network. To some degree, it might depend on what is the price of Bitcoin, right? Because if people are purchasing Bitcoin, using it for transactions, very, very expensive Bitcoin might mean that the amount of, like if Bitcoin itself, it goes to $500,000 per Bitcoin, the amount of fees might actually go down in Bitcoin terms because when you convert that to US dollar terms, that is actually, you could have the same amount of Bitcoin, but now representing more and more money, right? So even if adoption grows, people might be kind of mentally pricing those and matching that to their own expenses in US dollar terms. Hopefully that made sense. But again, I just used a rough recent average from Q4 of 2023 and said, maybe this will stay the same forever. Because again, the amount of fees does matter a lot as it gets later and later. Right now, your reward for each block is 6.25, and as of right now, before the halving this year, but the fees are about on average 1 per block. Fast forward to 2032, and now the fees per block, even if they remain at 1 Bitcoin per block, are higher than the block reward itself. And again, this depends on so many variables, it's really hard to figure out. Now, moving on, we also have to try to project out what is the actual overall hash rate of the Bitcoin network going to be. I said, let's say I think this is, I don't know if this is conservative, aggressive. You can make your own conclusions here. I said, let's say by the end of 2024, we're still only at 600 exahashes. Let's say it grows, by the end of 2025 to 900, sort of a 50% increase. And then it continues to grow, it grows slightly less year over year. So I have like 40%, 30%, 20%, and then 10% for these last couple of years. Because this is a very, very large network, right? You're talking about a lot of equipment to grow by, 300 exahashes per second in a year. And this really matters because even our miner here, as I said, who's looking at, hey, I now have 6 times the total capacity for my company in terms of what I can hash, my hash rate. The overall network itself is also growing. And I put this column here of, what is my company's percent of the overall network? And with this model, it fluctuates a little bit, but, and of course I sort of put numbers here that I think represent significant growth for a miner and for the overall network itself. But they're sort of fighting for their same piece of the pie. They're going between right around 5% of the overall network for this whole time. And I think that's pretty representative because you have a bunch of companies that are all facing same or similar unit economics, same or similar models of, miners available that they can purchase. And so when you're looking at this, I don't think it's unreasonable to think that companies are going to spend a fair bit to expand, but still only retain the same amount of the overall, hash power that exists in the globe. And so then we go to here and we say, well, given that percent of the network and the block rewards over time and the fees, how much Bitcoin do you actually earn? And, that goes down over time. So let me be clear. They're spending a lot of money. They're increasing their hash rate. Every year they're going up, but the amount of Bitcoin that they earn does, goes down. They would, with this model, they increase a bit, but then as soon as that halving hits in 2028, the next one, it goes down, and then in 2032 it goes down even more. And so for this particular model, I think you have to assume that the Bitcoin price is going to go up sort of in a bit of an exponential way for the rest of these numbers to make sense, right? No one is going to continue to expand and expand and expand their hash rate if Bitcoin itself is not becoming more valuable, because they will just look at it and say, well, it's not worth us spending the money. It's sort of a supply and demand thing. But as Bitcoin becomes more valuable, the miners will then expand. And so for this particular model, I want to be fairly aggressive with the Bitcoin price appreciation. And you may agree or disagree with me. And again, Bitcoin does not go up in reasonable in a straight line or on a reasonable curve. It has so much volatility. So this model, of course, is going to be junk. This is not even my Bitcoin price prediction, but this is just me saying, what if it appreciates 35% per year on average, so that I can do this math here and take a look at things. And again, it's so much more complex than that. But that actually gets to my overall point for this video, which is investing in Bitcoin miners is it's a very complex situation. I think any attempt to really boil it down and oversimplify is not going to be very accurate. But even if I assume it appreciates 35% per year for Bitcoin itself, which would get you to about $500,000, $500,000 per Bitcoin in 2032, we can look at their revenues now and see what would this mean for the Bitcoin miners. Right, if you have these dynamics where Bitcoin continues to go up like crazy on average, but the miners themselves are expanding, and so the portion of the pie stays similar, while the issuance, because the Bitcoin block rewards are going down. A lot of moving pieces here. If we look at that, we can look at the revenue here. Make this a tad bit bigger. You can see the revenue does go up over time, largely because in my model here, the Bitcoin price continues going up. It starts at $500 million per year, goes up to $2 billion per year, even to 2.5 here. Now that's their revenue. Let's also look at what are their costs going to be, right? And so I looked at I roughly got their power costs here, and I have this as a variable. 4 cents per kilowatt hour is what I'm using for this particular miner. You look at this and you say, okay, well, to operate all that equipment, they are paying quite a bit in power costs. And you see that continues to go up and up and up as they are actually deploying more of these machines. And so by the end, by the year 2032, they're actually spending about $1 billion per year in power just to operate those machines. Now, I also put on a number for their additional cost of revenue. This is what they have to pay for all of their facilities and all the operations they have, the people that are actually working at the facility, deploying everything, maintaining everything. And when I say the facilities, I mean all the cooling equipment, all of the actual buildings themselves, right? This all costs money, and there are these other operations. And I sort of got this number, roughly $5 per terahash per second, from I did a little bit of looking into Marathon and RIOT's most recent quarters. I subtracted off my estimate for their power costs, if it wasn't explicitly stated, and then I sort of looked at what was the remainder of their operating costs. And so this is roughly the number I came up with. I assume that's going to scale up as they actually have more and more machines deployed, more terahashes power in their data centers. And so I scaled that up. Again, it's a multiple of this amount right here, right? Their exahashes per second, their capacity. And so that's why it does actually grow like 6x from 2024 to 2032, because they have 6 times the amount of machines deployed. And that gets us to gross profit numbers here. And you can see this, does swing more wildly, because of the actual amount of revenue swings quite a bit due to the, the block rewards and such. And then I also factored in the CapEx, right? The amount you have to pay to buy new machines to actually add on 20 exahashes per second per year in capacity. And you look at that and you say, wow, those are some big numbers too. They're spending $320 million per year all of this, right? And this actually goes up. You can see there's a spike here, and it continues to go up, or it doesn't continue to go up, but it continues to be elevated. Once you start to factor in their existing equipment starting to die and need to be replaced with new machines, because not only are you actually adding 20 exahashes per second of capacity per year, you're actually replacing with the older ones from 5 or 6 years, from 6 years ago in this model, that have died. And so the total of that capex is what I'm modeling out here. And you look at this, and this doesn't even consider your G&A costs, any debt service costs, any of that stuff. This is just this model here includes those things I mentioned. And you look at what is their, some rough picture of what their earnings could be. And again, you just subtract off all the general and administrative stuff on top of this, or any R&D that they do. But if you're just looking at this here, you can see these numbers are all over the place. In some years they make money, in some years they would, with this model, be losing quite a bit of money. In fact, they're losing money overall, right? If I add these up and I look at their total, I hate to call these earnings, but I'm going to say earnings over the next 9 years, it's negative. So this is, again, one simple model, and this is even a model with Bitcoin appreciating 35% per year every year for the next 9 years, getting to $500,000 per Bitcoin. Now, this is why I say I think it's a very complex situation. There are so many assumptions baked into this. You may have different assumptions. I didn't even mention one of my other things here was that the equipment itself gets more efficient in terms of power usage over time. But I mean, it's such there's so much going on. You have to assume so much about the future to really think that these are going to be, to model out what the value of this investment should be. So I personally am not invested in any Bitcoin miners. I said that up front. I think it's a very complex business to be in. I think it's drastically different than Bitcoin itself, where you can evaluate that entirely different and separate from the miners. I think as long as Bitcoin has value and continues to go up, someone will mine it. But I think being a miner yourself is really hard. Now, one of the other things I was going to say, if you do look at these electricity costs, you can see some of them are so much lower. Look at this, 1.7 cents per year. If I just factor this in, that makes a humongous difference on this, because you can see all of a sudden your power costs are lower, your gross profit's higher, and now you're profitable pretty much every year. And so that is a significant advantage for RIOT platforms if they can continue that on. If I look at this one, this is the difference between just that one change. Just that one change in the electricity costs goes from, in all of these years, looking over time, having losing money into actually making quite a bit of money. And I'm not sure, let me format this, see how many commas there are in this number. But I mean, that's a profit. Again, this isn't profit. It's not a great measure because there's still some G&A costs after this and other things with the business that you have to evaluate. But just with a super, super simple model, they're let's call it earnings before G&A and taxes, which is a nonsensical metric. But at least there is profit here. There's a potential for profit to $2.7 billion over that time. And so this is such a complex business to be in, or such a risky business to be in. Let me put it that way, because there's so many unknowns. And so I'm going to close it here just to say that this is, if you are thinking of or looking at Bitcoin miners as an investment, I really think you should do some deep dives and understand how they are going to control their costs, how they intend to handle the fact that they don't actually control how many Bitcoin they can produce in an environment where the overall amount of Bitcoin that's being issued is, going down over time, exponentially lower. And so I think looking at simple metrics like price to earnings and anything else that actually even looks at over a short period of time, 2023 or 2024 results is just really might lead to some bad outcomes, for investors. That's my thoughts. Well, Kaza says biggest concern is big concerns. Are they able to pay their electric bill, or are they investing in owning a solar farm? Yeah, exactly. And so again, this is not to say that it's that every Bitcoin miner is a bad investment. I think, again, if there's a way that some Bitcoin miner you're looking at, again, I didn't do the deep dive in any of these companies. I just looked at a very superficial level, but I see a lot of other people who don't seem like they've done that deep due diligence, and I just think they don't appreciate how complex this business is. They just think, hey, we have computers, they mine Bitcoin, and that's how they get revenue, and they're going to make money from this. I think it's a good way. A lot of people, I've seen them use Bitcoin miners as a way to get exposure to Bitcoin itself. And I think it's very possible that Bitcoin can continue appreciating, year over year, while Bitcoin miners are not good investments. It's a very complex and competitive business to be in. So, all right, that was a whole hour. I did not intend for that to take that while. So, Walkaza says, thanks, Dustin. You did good. Thank you, Walkaza, for being on the stream. Sorry for a couple times where it cut out. I apologize for that. I am going to hop off now. Got to go make supper for my family. I am on Twitter, Dustin's Dollars, obviously on YouTube. So really appreciate everyone who watching. Walkaza, I see you're on here. I see. I don't know if there's anyone else still watching. I really appreciate everybody on here. And if you have any questions or comments, leave them down below. Thanks. Have a good one.